Please read this disclaimer carefully before proceeding further. Hello and welcome to this week's analysis of DXY dollar index. My name is Vic. So let's see what has been happening. Market has been market has experienced a lot of volatility in last week. So what actually happened? Now remember, we were looking at DXY around this area when the market was expected to come here and fill the gap and then fall back down, and the reason was this W pattern which was forming in here. Let me just quickly pick up the tool here. Yeah. So the W pattern was forming something like this, and the market was expected to fall down, and that's why after filling the gap it started to fall down. Now we were expecting it to fall down to this FCP zone here, but I actually missed a little point there that this is an M pattern which was forming around here, and that's why the market started to go higher. And if you know how to measure these using Fibonacci, then you will notice that this actually comes out to be exactly let me just quickly get that. Yeah, so if I just do this, it comes out to be exactly at 38.2. so market came right at 38.2 and then started to go higher. So it never actually came to FCP zone, which is fine. The market does not always work according to your analysis, but it worked according to the Fibonacci rules. So the market came here, started to go higher, and so what has happened now? What is happening right now? For that, let's see 4-hour time frame. On 4-hour time frame, the market came here. Let's quickly go here. The market came here, fell down, and then started to go higher, and this is forming another W pattern. As you can see, that market is doing a complex W pattern. So one of them is like this, other one is actually like this. And if you know how to measure these W patterns, then you know that the market can actually go a little bit higher. It is right there in that zone, the gap zone and FCP zone. So I'm looking for a bearish move on dollar, but it can go a little bit higher before falling down. Okay, so this is what we are expecting, at least for a day or so, and then after that we will have to reanalyze depending on the market structure, because if it actually goes above this and breaks above this, then we are looking for higher targets which we identified a few weeks ago, but we will have to reanalyze them. And if the market starts to decide to go down below these levels, then we will have to consider these levels as our support zones or target zones. So this is what we have on here on the chart. Let's mark few levels here which I can give to you. So near about, if the market starts to go down, then right now this can be a good level to watch out for. That 38.2 can be a good level. Let's change the color of it. So that can be a good level here. And then obviously, we also have this cluster area, so you can treat this as kind of like support zone here. So these are the levels that you should be watching, and let's look at it on Watt and Visage. On Watt and Visage, if you remember, in the last in the month starting analysis, we were expecting market to come down to near about 91 area or so, which market has not. But remember, this is monthly time frame, so that can still happen. However, if you just pay attention to what Vata is telling you, the Vata is telling you that the market is bullish because this is blue, and there was a signal, and the market is expected to go higher, and we have this profit target set right there. So ultimately, over multi-month time frame, it is expected to reach near about 95 area or so, which we have been talking about. Remember, since August last year, on October last year, that market is expected to go higher into 95 area. So I won't be surprised if it starts to pick up momentum and go there, but there are few gaps left at the bottom of this DXY. Around there there's several gaps left, and there is a lot of bad price action left as well. So I'm expecting a sudden and deep correction on DXY at some point in time, and it can happen at any moment in time. Let me actually go back to the chart and I tell you. Okay, so there is a gap left around here. Let me put here so that we know exactly where it is actually showing up on this feed as well. So this is a gap left. So at some point in time, this gap is going to get closed, pretty much like how it did this one, the previous one that we saw. So that gap is, this gap was closed, this gap is still open, and there is a gap left here. So at some point in time, maybe coming here, after coming here, at some point in time I'm expecting a deep correction coming into DXY, and that can actually, like, just fall back down around 90 area and then go back up. And in that process, it is possible, this is just a possibility, not an analysis, but this is just a possibility right now. You see, if I just just 1 second, if I close this, now it should be much more visible. So there is a gap here. So if I just draw something like this, this will form an M pattern, and once this has formed an M pattern, the market can go higher to the upside. Right now this is kind of sideways movement which is happening, so that means we can expect market to come back down inside this channel. Remember, this is the mid of the channel, and this, the market can come here, and after that this can actually fall down. So this is one of the possibilities. So watch out for certain movements on DXY as well, because these gaps are going to get filled at some point in time. This one got filled. There were several here which ultimately got filled by huge momentum to the upside, and this is how a huge momentum to the downside can also come. So this is what we have on DXY. If you enjoyed this analysis, make sure you share it with other traders and trading communities, and hit the like button and put in a comment below this video asking if you have any questions. Let me know in the comments, and if you have any general comments or feedback, that also you can put in the comments. And I'll see you in the next one. Have a great trading week next week. Thank you for watching. Find and follow us on these social media channels.